A market force can be generally defined as an economic factor that impacts the price or the demand or the availability of a product or service. For example, there can be general economic factors such as inflation rate or interest rates, commodity prices, foreign exchange rates. In the context of an active-passive analysis of a business interest, a market force is, on the one hand, defined more specifically, but then the outcome of that can also be inclusive of a broader array of factors. For example, a favorable governmental change can be a market force in an active-passive analysis. In an active-passive analysis, there are certain attributes that exist with regard to a market force. First, and probably most important, the market force actually has to have caused an increase in value of the separate business interests. Second, that market force really needs to be outside of the control of either the managers or employees or owners of the business interests. And finally, that market force needs to be able to be measured separate and distinct from the actual increases in value caused by the active efforts of the managers, employees, or owners of the business. In an active-passive analysis, when the business appraiser is determining the part of the increase in value that's caused by market forces versus the part that's caused by the active efforts of individuals, the definition of a market force is very important. When defining a market force, there has to be a definition of the market over which the force impacts that market. Typically, what that means is the market in a business valuation context is defined as a group of comparison companies that really operate in a similar business environment as the subject company. The business appraiser then measures the change in value of the comparison companies as it relates to the market force. Once the impact of the market force on the change in value of the comparison companies is made, the next step is the appraiser takes and measures the change in value of the subject company. But that change in value is compared to what was expected as a change in value given the impact of the market force on the comparison companies.